and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Market Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. All right, so let's proceed. There is quite a number of developments that have been happening in the market so far. And I think one of the key highlights, one that you cannot ignore, is the big sell-off that is currently happening in oil markets. So currently, Brent oil is about 8% down since the open of the week. And clearly, this momentum is only getting to strengthen. So what we had here on the 4-hour chart is a double top formation where oil managed to hit a top of about $94.885 in 2 consecutive weeks. And then on the third week, we had a breakout of this neckline. The market retested, and from here, it has been always downside momentum. So yesterday was the biggest sell-off, right from the opening of the day all the way down. Was just a big sell-off as the OPEC meeting continued. So on one side, we know that demand for oil globally has really gone down, but on the other side, the OPEC countries have been extending their oil output cuts. So as a result of the falling global demand, we have seen some much bigger sell-off in prices, but hopefully at some point you'll get some good support and oil prices will resume the bullish momentum. So far, it seems like a bearish momentum has not exhausted yet. So from what we are seeing here, it's a small time frame. You can see the markets are not moving much through midnight and the Asian session. So remember, it's a thin week as we are looking at an all-week national holiday in China. And with this happening, it means that there's thin trading that is expected throughout the Asian sessions. So as a result of these, if you look at these, you'll notice that the market was unable to break this area here. And on the lower side, it seemed like a horizontal momentum to me. So this seems to have been the support. And now there's attempts to break towards the lower side. So today, if you're trading oil for the day, all you have to do is to monitor this price action. And actually, if there's a clean break towards the lower side, you continue trading lower, but then also monitor the upper trend line here. So if the market was to break this area here, then it could imply that the market is resuming the bullish strength. So in this case, monitor this area and this area for a potential breakout. And that could happen as soon as the London session. So, hello, Molenga. I can see Butin, Vinod, Richie, Philip, and Lemuel. Hello, Oscar. Hi, John and Dennis. Joseph, you can see Mana in the house. Buju and Jaysport. I am doing fine today. So let's get things going. So from the economic calendar, we had quite a number of things happening. So let me share the screen first. So here's the economic calendar. First thing to discuss was the Reserve Bank of New Zealand basically choosing to maintain interest rates for the third consecutive time at 5.50%, whereas the Reserve Bank of Australia had also done the same for a fourth consecutive time, holding rates at 4.1%, which basically means that these two central banks have basically decided to hold interest rates level at the current rate, and then they wait to observe the overall effect on the economy, hoping that the high interest rates would eventually push inflation back to their targets. So we also had the ADP non-farm employment change, which came in weaker than expected, basically showing that the US private sector created 89,000 jobs compared to an expectation of 154,000, and of course, previous reading of 180,000 jobs. So what this basically means is that the job market is softening. And if this is anything to go by, we'll also be expecting a smaller number on the non-farm payrolls tomorrow. So on the services PMI, we saw 50.1, which was slightly lower than the expectation of 50.2 and the previous reading of 50.2. This basically shows expansion within the services sector in the US, 53.6 on the ISM services PMI, This was a slight improvement from the previous reading of 53.5 and a drop from 54.5 the previous reading, but still above 50.0, which shows expansion in that sector. So factory orders are improving, being up 1.2% in the month of September, compared to the previous reading where they were down negative 2.1% and versus the expectation of 0.2%, meaning that factory activity is regaining again in the US. So crude oil inventories in the US are much down. And when you see supply being down, it tends to be bullish for oil. But somehow yesterday, oil was extremely bearish. So from the previous reading of negative 2.2 million, last week it came in at negative 2.2. And it basically means that there is less and less crude oil stocks within the US. And this should be quite bullish for oil. So while we continue trading the bearish momentum, a reversal may imply a better trading opportunity compared to looking to extend the current bearish momentum. So this morning, we haven't had much. We have seen ANZ commodity prices in New Zealand coming in at a positive 1.3% compared to the previous reading of negative 2.9%. Bank holiday in China continues. Australian trade balance improved to 9.64 billion from the previous reading of 7.32 billion. Japanese that year bond auction is quite a concern right now because the yields are rising. So this morning we were looking at 1.69%. Then there's a German trade balance, which also improved to 16.6 billion. So you can see the overall improvement across board for European as well as Asian economies, where if you are seeing more economic activity, then at some point we will be seeing a higher demand for oil. So French industrial production also improved, dropped to negative 0.3%, but the drop was better than expected because the actual expectation was negative 0.4% compared to the previous increase of 0.5%. So going on for the rest of the day, we will be looking at construction PMI from the UK at 11:30 a.m. And then we'll be looking at the weekly unemployment claims in the US, and this will be released at 3:30 p.m. Together with trade balance data for both Canada and the US. Then later on, we'll be looking at the IVA PMI or Purchasing Managers Index for Canada, and these will be released at 5 p.m. Then later on, we'll be looking at natural gas storage in the US. German Buba President Nagel will be presenting a speech at 6 p.m. Then FOMC member Barr will also be speaking at 7:15 p.m. So going on for the rest of the day, for the rest of the week, we will also be focusing on the non-farm payrolls tomorrow. And this is where we basically expect that the US created 171,000 jobs compared to the previous reading in August of 187,000 jobs. So if the non-farm payrolls show some softening in the job market conditions in the US, then this may have the effect of pushing the Fed to hold interest rates steady, and that could be negative for the dollar. But then if the job market remains tight, we see a bigger number than 171K, then in that case, there's a likelihood that the Fed may have to go for another rate hike, which would be quite positive for the dollar. So average hourly earnings month over month expected to have increased by 0.3% compared to the previous reading of 0.2. So when you see wage growth, then this is quite a problem for the Fed. They don't want wages to be growing as fast. So in this case, it would push for another interest rate hike. So focus will be mainly on the number reported here versus the average hourly earnings. And if there is an increase, then in that case, it could force the Fed to consider another rate hike, and that would be quite positive for the dollar. So as for Canada, we expect the unemployment rate to slightly worsen to 5.6%, and the number of new jobs created in the last 1 month to be 22.1K. So same kind of reasoning. So if we see the job market conditions tightening, that is seeing higher employment over the last 1 month, then in that case, it may push the Bank of Canada to go for another rate hike, and that would be positive for the Canadian dollar. So focusing on today, I think the most important news for the day will be unemployment claims for the US at 3:30 p.m. meaning that in between now and then, we will be focusing on a pure price action. So I'll be looking at a couple of charts, try to identify if there is any recognizable chart patterns that might present a nice trading opportunity. Good question here. Are there people who make a living out of Forex trading? Yes, there is. Let's have a private talk. Samuel Mwangi, kindly reach out. All right. So continuing with technical analysis, let's see what's in store for the day. So one key highlight for the day is that the dollar index really attempted to go back downwards yesterday, but then today also attempted to go down, but we can see from this price action that the dollar seems to be pretty strong and is already recovered the early losses that we saw at the beginning of the day. And there's a potential we could be seeing the dollar index heading to the previous high of around 107. So if we see the dollar index making a run for 107 again, then that would mean that other currencies continue weakening to the dollar. So for instance, the pound USD managed to make this rally, and as it got closer to this trend line, you can already see weakness, and the dollar is attempting to gain ground on this currency. So there is a good likelihood we'll be seeing some form of reversal, basically reversing whatever happened yesterday. So we could be seeing the pound continuing to weaken against the dollar and potentially retesting the previous low that we saw yesterday. So it's a similar case for Euro USD, very good rally all the way up, and now we are already seeing signs of weakness. So there is a good likelihood that if the dollar remains strong for the day, then we see the market retesting this previous low. So as for USDN, we know that we saw the Bank of Japan intervening here on Tuesday, and the market pulled back and eventually ended the day around here. Yesterday, pushed higher and then attempted to keep going down and close the day here. Then today, at the early trading hours and at the opening of the Tokyo market, we saw the big sell-off here, and then the market basically reversed the entire move. And now we are looking at a potential movement further back downwards. So remember, the Bank of Japan is very committed in defending its currency. And what it's doing, it's basically selling US equities and using those dollars to buy the Japanese yen of the market, which creates some form of strength for the Japanese yen. So since we saw this top that slightly touched on the 150 price level with a high of 150.157, the Bank of Japan has committed to push prices lower, and we expect this kind of effect to continue in the markets. So for now, you can see the sharp recovery, but basically closing the small gap that we had at midnight, and now we could be potentially seeing the market continue to move further back downwards. So on a very short-term time frame, it seems like this is an area to be concerned about, and now we have a new point. So this could be our trend line to be observing on a very short-term time frame to see whenever the market is facing some form of resistance. So if there's a break, we continue trading higher, but then if the market is unable to break here, then we look for short selling opportunities, targeting even lower prices. So don't fight the Bank of Japan. Then we have the USD CAD, currently completed this pattern here, is moving higher, and the Canadian dollar tends to be positively correlated with oil. So as oil continues weakening, then also the Canadian dollar continues weakening. So this may explain why there's a very strong rally on the dollar against the Canadian dollar. So you'll be expecting some further upside, and of course, high volatility during the non-farm payrolls tomorrow, because the Bank of Canada will also be releasing the jobs report too. So gold is ranging. It's basically moving sideways. For the last 3 days, we haven't had any major moves. So this seems to be the key trend line here. And then from the lower side, this is what we are seeing in the last 3 days. Sorry for that. So at this point, this is where we talk about patience. You just wait and see. So you basically be patient and observe the price action around these two trend lines. So if there's any clean break, then it would represent a trading opportunity. But for now, the market remains within this formation. So far after the big sell-off, it is reasonable to expect some form of pullback. But then if the dollar strength continues, then we could be seeing the price continue to push further downwards. And of course, there is the expectation that this level, 1805, which was serving as the bottom back in February, could be retested, and it could be having an impact on the price. So there's a good likelihood that gold could drop further back downwards to 1805 before we see the proceeding move. So another key factor to consider, and this is thinking fundamentally, for majority of the fund managers that made some good profits since the beginning of the year, especially trading the AI boom, they're looking to reserve those profits. And one of the ways we have seen being implemented is selling those positions and then locking that money in a 3-month or a 6-month treasury and then going on holiday. So treasuries are becoming quite risky, especially with the rising interest rates. So bond valuations are becoming quite risky. And then the opportunity in gold is getting better and better. So the bigger the sell-off that we are seeing here in gold, the better the opportunity. So since we saw this high here, I remember seeing this high here, this was in May, gold has gone down about 12.6%. So this means that if you capture a really nice low price for gold and buy, then capturing a good return of, let's say, 8, 9, 10% before the end of the year might become quite possible. And now investors will start comparing whether to lock their money in a treasury or whether to lock their money in gold. So remember, gold doesn't give you yield. But then if you are in a treasury, the treasury will give you yield. So if the yield is at, let's say, 5% in a year, so if you lock your money for, let's say, 3 months or 6 months, then it basically means you make a proportion of that, not the full 5%, because you haven't held for a year. So gold is becoming quite an attractive asset as it gets cheaper and cheaper. And at some point, maybe this month or next month, we will be seeing institutional participants starting to buy in on this big sell-off. So whenever you see such big charts, and in this case, if you count the number of days, this is 1, 2, 3, 4, 5, 6, 7, 8, and today could be the 9th straight day that we are continuing to see the price of gold going downwards. So the last time we saw this happening was 1, 2, 3, 4. Ignore this one, and then 5, 6, 7, 8, 9. So about 9 consecutive days, but there was a break in between. That's the last time we saw a big sell-off in gold. So in other situations, you can see it's mixed candlesticks. So what this basically means is that there's a huge sell-off after this particular pattern was broken. But then at some point, we'll be expecting to see a pullback. So as much as we are having this big sell-off, there's a good opportunity to buy once the price shows evidence of changing direction. So AUD-USD clearly made a break after the Reserve Bank of Australia earlier chose to hold interest rates at 4.1. But then we have not seen an acceleration since. So after the big sell-off here, the market pulled back, and yesterday attempted to go up. Then today we had a break towards the inside, followed by a pullback. So any form of dollar weakness would mean we rally back to the upper trend line. But then if the dollar persists and keeps the strength that we are seeing here, then as a result of these, we could be seeing the Australian dollar pulling back downwards and retesting the previous low that we saw here on Tuesday, as well as on Wednesday. So US equity indices, we had this triangle forming on the US Tech 100 or the NASDAQ. The market managed to break, went all the way down to the target, which was the previous low. This was the target right here, bounced off and pulled back upwards. And now we are looking at a potential retest of this high. The triangle is no longer in play anymore. So the market is looking to retest 14,855, which was the previous high. And this could be happening as soon as the London session continues. Then we are looking at the S&P 500 here, quite a short-term trend line developing here. So on the 50 minutes chart, you can already see that there's a trend line somewhere around here. And the market is currently retesting that trend line. So if we happen to see a breakout, then we continue trading higher. But then if the market is unable to break this area, then the potential for squeezing in a position here and targeting the previous low might play out for the day. US 30 also doing the same, attempting to move higher, but then new trend line is developing. So if you go to 15 minutes chart, you zoom out, then you will notice this formation here. So this market is attempting to break. Seemingly, it could be breaking here and moving higher. So we observe and look for evidence that the market is moving higher. And if there is more evidence, then you go for a buy position and perhaps even target the previous high, which is the high that we saw on Tuesday. So an acceleration above this price level would mean we target this area here. So as for oil, we already discussed this. It's trading within a range on a very short time frame, 5 or 15 minutes chart. In this case, we're observing for some form of breakout so that we can squeeze in a position. Then France 40, showing some very nice support here. If you look at the candlesticks and the way they are behaving around this area, then it's clearly some form of support for this market. So long lower tails are indicative of rejection of lower prices, which is usually in preparation of a good rally in the markets. So in this case, if you observe this area properly, you will notice the price has been rejecting this area for quite a while now. And there's that likelihood that the market could now start making a move towards the upper side. So on a long-term basis, if I zoom out, you'll notice that the market has just been oscillating between the two trend lines and now has just retested that support. So the EU 50 is also facing some similar support. So if you go to the 4-hour chart, then it's quite clear that this level is quite significant. So the market attempted to break towards the lower side, failed, and has now come back towards the upper side. So this may represent a very nice entry for bullish positions. So I'm trying to highlight this area here. So this is a proper setup for a continuation upwards. So I expect some further upside to be happening here. And then after the big rally in Bitcoin on Monday, what we are seeing is the market normalizing and playing within that area here. So we don't have much of a momentum for the week. So it's more of a sideways momentum until we get to the non-farm payrolls, which could inject some much needed volatility in these markets. So UK 100 basically showing some support too. So after the big sell-off, you can see that the market found this area as a key level support right here. So this was the previous support. Market dived all the way down, but then since then you can see the improvement or the reversal happening from that area. And now there's a high likelihood we could be seeing some further upside happening for the FTSE 100 index. Apologies for that. What is the driver of dollar strength? I'm trying to get the market sentiment and I'm confused a bit. So the key driver of the dollar strength right now is the US treasuries. So US treasuries are yielding somewhere between 4.7 and 5.5%. And this is basically becoming quite a challenge for investors because there's a lot of money flowing into these treasuries. So these short-term treasuries are basically yielding some really good returns, and investors are having to compare these returns with other form of risky assets, and in most cases choosing the US treasuries. So as a result of that, we have been seeing dollar scarcity remaining a theme. Then there's this other issue of weakening currencies. So we know that the Kenya shilling has lost about 20% of its value against the dollar since the beginning of the year. So this has been the same common theme across the world. The South African rand has lost, the Turkish lira, the Mexican peso, the South African rand, like all currencies around the world have been losing to the dollar. So if in Kenya, you realize that the Kenya shilling is losing more to the dollar, then you start converting your Kenya shillings into dollars. So that has created demand for the dollars, and people have been just holding more and more dollars. And this is happening at a global scale. And as a result of that, it has made the dollar so valuable against other currencies. So as long as US interest rates continue rising, then the overall expectation is that we continue seeing a stronger dollar. And you can always speculate and take advantage of this by buying the dollar against weaker currencies. So one of the key concerns you should have right now is USD JPY, which we have been trading upwards for quite a period now. But then from what we are seeing, there's a good likelihood that this could be the top for this cycle. So you can see from January this year, it has been a consistent move upwards, and the USD JPY as well has stopped at 150. And this was the same thing last year. When the market got to this area, the Bank of Japan decided to intervene in the currency market. And by intervening, they bought a lot of JPY off the markets, which pushed prices back downwards. So this could be happening at this price level here again. And this would mean that the dollar now starts losing to the Japanese yen. So this could be a consistent theme. So anytime the market pulls upwards, then it may make sense to look for more short selling positions. So I have seen 2 messages asking me for a private conversation. I'll just share my Twitter profile, then you can hit my inbox. Hi Rufus, do you guys share signals? No, we don't share signals. What we share is education as well as analysis and what we think about the markets. And from this, you can use that information, do further research, and develop your own trading idea. I think it's the continued growth of the US economy, signaling continued rate hikes. Yes. So whenever you see rate hikes, it means that we continue seeing higher treasuries, and these bonds yielding quite a good return, basically drives more currencies out of the market. Basically because when you buy bonds, you give your money to the US government and you get a piece of paper. So overall, people will be holding more and more bonds and less of cash. And it basically creates a scarcity for the dollar. Market condition from last report indicated some softening. Yes, so that's why we are focused on this Friday's report, so that we can get an overall view that would basically help the Fed shape their decision on the next meeting. Look at Tuesday's market. JOLTS, it was very higher than expected. Yes, the JOLTS job report is basically a leading indicator. It basically shows the future oncoming trends, whereas the non-farm payrolls is a lagging indicator showing what happened within the last 1 month. So while there's more advertisements, it basically means that we expect higher employment over the next 1 month or so. But then for the job report, the non-farm payrolls, it basically shows you what happened within that period. All right, guys, thank you for your time and for participating in this session. So remember, today is Thursday, so we will be having another session at 8 p.m. So we will be discussing the progress over the day and take a deeper dive into what might happen during the non-farm payrolls. So hopefully today you'll be able to identify some good trading opportunities. And I think these European equity indices present a nice opportunity. So if I was to choose a chart for the day, it would be the Euro 50 and the French 40 index, since they are showing some very strong rejection of lower prices, and this is happening at support. So a high potential that we could be seeing some further upside happening from these equity indices. So thank you guys, and I hope to see you on the next one. Is there any way to invest in US equities from Kenya and earn interest? Yes, that is FX Pesa. Just download the Equity Trader. Download the Equity Trader app. And then once you download it, you can basically sign up and buy the stocks you want, as well as indices. And when they pay dividends, you will also get dividends in your account.